Our morning call starting, boys.
All right, good morning, everyone. I'm going to get going here. All right, U.S. The stocks traded moderately lower yesterday for most of the day. The Dow did manage to just pop its head above flatline at the very end of the day to eke out I think a eighth straight day of gains there. Volume's really light. I think there's a little bit of nervousness and profit taking going on. I think we're about 10% above some of the shorter term moving averages on a lot of the markets right now. So, you're starting to see people start to get a little bit nervous that we're, quite overbought in the short term. The takes and financials, were the laggards in the market. I don't think there's a whole lot to take from that besides maybe just a little bit of profit taking. They've been some of the leaders for the last little while. In Asia, we saw some of the property stocks, and I think developing companies that were under pressure again today. Worried about the tightening that's coming there. But the good thing is that basic materials outperformed for the first time kind of in a while. They've really been, even throughout this rally, I think we've really seen basic material stocks really underperform. And I was saying to some of the guys yesterday during the day, we really saw a nice rally out of physical commodities yesterday, and that comes kind of a couple of days after really good non-farm payrolls in the States. So I think really significant that we've seen physical commodities trade up reasonably after really strong U.S. data, and I think this could be a big turning point for us in the markets. Is that we start to get markets react well to good data and maybe react bad to bad data. So it'd be quite nice to see that happen again. And also, I think the markets are starting to get used to the fact that they know that the Fed's going to be backing away from the table probably sooner rather than later. So this is something to keep in mind over the next little while. There's no corporate action on the day today. I see that Sanlam was raised to neutral versus underperform at Credit Suisse, but really no corporate action. On the market data front today, we had Aussie home loans are lighter than expected earlier. We've got CPI out of France and Spain. Then we've got mortgage apps out of the U.S., retail sales here locally, and advanced retail sales in the States as well. So kind of a big day for the retailers. I'm actually going to go over one here locally. I'm going to go over one in the UK on the back of that also. So let's just jump into the maps real quick. Okay. First one I'm going to show is RMH. Yesterday actually I was talking to Sean about this level at around 40, between call it 40 and 39.90 in RMH. I didn't pick any up when they were 40 that offered there, just because I know that they're going to be reweighting here a little bit here in the SWIX. So you can see in the 30-day, significant level there as well. So I think kind of 39.90 to 40 somewhere in there, that level. That's the risk range we're going to want to look for in RMH. And I would say that if we were to get below that level, we'd probably be looking to test the next level of support down here around 38.40. Which is, I would actually even prefer it to buy off of the 38.40. Quite obviously, you'd like to buy it at the lower price, but this level of support I think is huge, and it's really well defined. So I do think there's support 39.90 to 40. And I think they have to do about a 0.6% reweighting for the SWIXY on Friday. So they could be selling as many as 13 million shares on Friday. So just keep that in mind. We could see further downside here, but these are the kind of support levels we're going to want to look for going into week's end. Okay, Naspers. We tweeted this one out yesterday. This one came down and really tested where it broke out from, which is really right around the 620 level. I mean, I think I sent out the support around 622, 623, somewhere there. Or is that 622? Let me just pull this in a touch. But that's kind of where our risk range is here, between about 620, 622. That's really where we broke out with this little consolidation range that we had for a couple of days. And I would say that grabbing some of these today also could be a good nibble. This is actually the percentage-wise, I think, the biggest add on the SWXY reweighting. They're going to have to buy 3.2 million shares on Friday, from what we understand. So something to keep an eye on. This thing could outperform on it. Yesterday, obviously, it underperformed, most likely, in my mind, probably on the back of them buying stake in that Russian venture, because of the fact that people thought there was going to be a big cash divvy coming after Mail.ru was paying out that huge div to shareholders. All right, let's look at Vodacom real quick. I just want to just go over this one more time, because I'm just looking for levels that may be breached on some of these reweightings that are going into Friday. 116 we obviously know is really where real support is here, and Vodacom. There's also going to be some selling. If I'm not the number we're looking for is around 4.6 million, which is quite a lot of this. If this thing breaks 116, we know where the support level is next. We're looking down here around 112. So let's keep this in mind going into Friday. All right, the next thing I want to talk about is gold shares. We had a key reversal last week, the end of last week, on some of these gold shares in the States. And then they kind of, the next day, they kind of failed here locally a little bit. But they're starting to break out of the downtrend here. And we've had Harmony, for instance, has traded really well the last few days, really outperformed heavily. And you can see there how Harmony is just really broken out of its downtrend. Wouldn't be surprised to see it come up and retest this level up around $65, which was significant on the downside. When we broke through that and we came right back up, retested it, couldn't get above, and then we failed there again. So I think Harmony could potentially get back up to $65. Goldfields is also kind of breaking out of its downtrend as well. This thing, it's not hard to break out of a downtrend that's that steep, I suppose, but we're just kind of moving sideways out of it. And I just think that we're kind of moving into a little bit of an opportunity cycle here in these gold shares. We talked about Anglo Gold yesterday, and the fact that, if it got above 27 intraday, it was also ready to go. This thing hasn't really broken above its downtrend, but it's kind of looking like it's going to come up and test that level, and also matches up nicely to where it failed before. So I think this is something to. I think these gold shares could have some legs going into the next week or two, especially with the way they've reacted on the back of the Fed, with the back of non-farm payrolls on Friday. Goldfields, we're looking at potential to buy close to 11 million shares. So it doesn't really make sense that they've been trading so poorly, but if they're going to have to buy that many, I think we're going to get a good push out of them. All right, Imperial. I want to show Imperial. I'm going to jump back all the way 5-year chart. In fact, I'm not going to go 5 years. I'm going to just look at a 2-year chart in terms of the trend line here, and just look at. We've kind of managed to, as of yesterday, really break support on the trend line there. You were looking at a bit of a wick right there, so that's why I'm drawing the trend line like this. We actually did close below that yesterday, and to me, so we have breached long-term trend line support there. I'm not significantly bearish on the stock. I don't know if they've got to do any reweightings on Friday. They've got to sell about 800,000. So this thing's been under pressure a little bit, and underperformed the market quite significantly over the last few days. So maybe a little bit of an opportunity here on the short side. I'm not sure, but just keep it in mind today. I'm going to look here. I wanted to look on a 5-year chart, and I wanted to show Trueworths here, which is really getting close to testing long-term trend line support. If you look right about here, it's going to come in kind of close to $90. I can actually pull it back a little down here, which actually takes us close to what's also lateral support here at around $88. And I think that this is kind of going to be the last real level of any type of support out of Trueworths. This thing's been underperforming badly over the last little while. I think you've got to think that At some point here, it's going to find at least a dead cat bounce, but it just continues to underperform every single day. This is really where I think the kind of bottom end of the range to look to actually take any risk would be as close to down around $88. And then the last one I'm going to show here is also another retailer, but out of the out of the London Exchange. Shorten it up a little bit there. In fact, let's take it even shorter. Let's just look at a 3-month. And you can see here on NXT. NXT is another retailer there. I think it's accessories and shoes and things of that nature. We've broken support here at around 41.40. Closed below it yesterday, so it looked like we failed here on NXT. And could see it trade all the way down here to kind of fill the gap as low as 37 odd. So if you're trading in sterling there, London, have a look at NXT. It might be a good little nibble on the short side. That's it for today, guys. Thanks a lot. What's that? Oh, fuck's sakes. Well, no one else told us. You heard in there? Yeah. Fuck it.
How long did it take you to find it?
Huh?
How long did it take you to find it?
No, it didn't take me long at all for that. The rudder sent me that this morning, but the ones yesterday I was